Hello guys, so this is gonna be part 3 of my 15 minutes scalping strategy. And in this part, we are going to look at specific time interval of the day that we are going to look for setups, okay? And that time is going to be between 7 a.m. Ghana time, between 7 a.m. Ghana time to 4 p.m. Ghana time. So that would be 16. So this time window, that's where we are looking for what? Setups. Okay. So 7 a.m. to 4 p.m. Ghana time. Is that right? So you have to convert this time into your local time to know this time interval. Okay. Now, what I look for within this time interval, when I get on the chart and I'm looking for setups, immediately the 7 o'clock candle opens, I look between 12 to 7 and I want to find out if any institutional market structure has formed. When I say institutional market structure, I mean liquidity grab and a break of structure with displacement like this. If this has formed already with between 12 to 7, then between 7 to 4, which is our entry time frame, period, we are looking for a pullback into the breaker or the order block to sell. Okay. The same thing if it is a bullish scenario where we've grabbed liquidity to the downside and broken structure up, then between 7 and then 4, we are looking for a pullback into that area to look for what? Entries. But if you look into price and we don't see that any of these institutional market structures has formed, or probably it has formed but price has moved far away from, then we can ignore that institutional level and look for what? A new institutional structure to form. So this 7 to 4, this is the time we want to be looking for entries. Now we look between 12 to 7 to see if any institutional market structure was formed. Here I don't see any clear institutional manipulation and break of structure. What formed here was what? What formed here was a failure swing. So we don't have any manipulation and a break of structure. We don't actually have this. Okay, so if this was present here, you would have looked for buys. You would have looked for a pullback to buy, but it's not present, and it is also not present here. We don't have any clear manipulation there. So if so, then we can wait for that manipulation to happen inside here for us to look for a setup. So you just be waiting patiently. So now we get that here. We have the manipulation that we expect. We have the shift in market structure we also expect right here. Okay. So as soon as we close down here, we can look for entries. This is the order block. So it is actually this wick that broke the low, and you're going to do all of these on a 15 minutes time frame, mind you. This wick was what caused the market structure shift. The next candle immediately traded into this order block and sold off. So that could have been your entry to sell off. Okay. Now you are only looking for entry between 7 to 4. Okay. After 4, you don't want to be looking for any other entries. Okay. If you miss this entry, then you also have this order block that you could have entered from right here. Okay. You can see that this candle traded into this order block and it's sold off. And then your target should always be ×2 of whatever you are risking. Okay. ×2 of whatever you are risking. So you are first of all going to look at 12 to 7 to see if there is any manipulation and a break of structure, and we have any fair value gap that we can trade from. If we don't see anything of that sort, then we wait for manipulation inside this time to look for our setup. Okay, so let's look for more examples. Let's look at the next day. Okay, so this is 12. Now let's mark between 7 a.m. to 4 p.m. So 4 p.m. is 16. Good. So between this time and this time, that's when we are looking for what? Entries. Now we want to look at this time 12 to 7. We want to see if there is any manipulation with a break of structure. Here we don't see any manipulation. It's just normal order flow. A break of structure down here, pull back to order block, break of structure. We don't have any manipulation with break of structure, just normal order flow. So we can't use any of these levels to enter. So we are going to wait patiently inside there for manipulation and the break of structure to happen. So here we have manipulation of this high immediately after 7, manipulation of this high, and the break of structure of this low. Order block. You are going to be using your order block or fair value gaps. The last fair value gap that exists, or the order block for your entry. So this would have been your entry, beautiful entry. The target times 2 of whatever you are risking, right? Easy. And as I said, the entry should be between 7 to 4 p.m. Anything outside it, just ignore, because normally price consolidates between 16, which is between 4 p.m. to midnight. Price likes to consolidate. So this is the time you're looking for entries. Well, this would have been a beautiful trade, right? Okay, let's look at the next example. So you can see that it is happening all over. This is a new day. Let's mark 7 to 16. That's 4 p.m. Okay. So for all the previous examples we didn't have previous manipulation between 12 to 7. Okay. But in this current example that we are looking at, between 7 to 4, for this particular day, by the time we are looking at the chart at 7, we've already had manipulation. And here is the manipulation. Manipulation has already happened between 12 to 7. And here is it. We have this low. There is this low that was swept. And we have a break of structure. So now that manipulation and break of structure has already happened. Then between 7 to 4 p.m., we are only looking for entries. So you'll be looking for a pullback into a fair value gap, order block, a breaker block, wherever you want to enter from. So this mitigation block, price pulls back to it after 7, and that's our entry. So since manipulations had already happened between 12 to 7, we are going to use the fair value gap or order block within that manipulation to enter, and we are not going to wait for any new manipulation like we did previously. Okay. So here we enter straight from this previous manipulation with the fair value gap left behind, target times 2 of whatever stop loss we are using. Simple trade. Very simple. Let's look at some more examples. Let's look at the next day. Do 1 or 2 examples, and that will be the end of the lesson, and it will be up to you to go and study these things on your own charts. Okay. So here between 7 and 4, that's where you're looking for entries, but we have to analyze this part of the chart to see if any previous manipulation has happened within that time frame. And here it's quite difficult to read because we are taking highs and lows. We take this high, we take this low, come and take this high, come and take this low. So generally this area of price was consolidating, so we can ignore this and just wait for a manipulation that is current here, okay, for entries. Now let's see if any existed. So I think we have one here. Immediately after 7, we took this highs. After taking that high, we broke structure on this short-term low right here. Okay. Price pulls back to your order block here, and that's your entry. That's your entry to sell right from there. And we target times 2. Simple. Simple. Let's look at some more examples. Let's look at this example. I think this is a beautiful example. The price had already reacted from it, but I could have looked for continuations. Anyway, between 12 to 7 to 4, that's what you're looking for setups. So let me mark that's 16. Good. So we are going to look between 12 to 7 to see if manipulation and break of structure has happened. And what we see is there was this manipulation to the downside. There was a break of structure here. There was a pullback into this down close candles. That's your order block. And price moved away. So if you're looking for continuations, you wouldn't expect to buy from here because price has already mitigated this. So this is the order block that's left behind. So that will be our next entry point. And we would have missed this trade. Price didn't tap to the area. So we would have missed it, but that's fine. But this would have been a perfect setup. So this day we didn't have any setup, and we closed for the day at 4 p.m. which after 4 we don't want to take any more setups, right? So we can skip and look for the next day. This one, this back test is from volatility 75. Okay. So the next day between 7 and 4 p.m. that's 16. Ghana time, you're looking for the same ideas. Okay, before you look for anything here, you have to examine this area first. Examining this area, what do you see? You can clearly see that there was manipulation here. There was a break of structure down here. So immediately after 7, you see price starts to pull back and it's pulling back to what? This huge order block is what I will use because it has the highest body than this. Even if you use this as your entry point, your stop loss should still cover to that high, okay? Because it's a failure swing. And as I teach about failure swings, you shouldn't put your stop loss here, but here. So this order block for entry, right after 7, there was previous manipulation and break of structure here. So you only look for a pullback to enter. If we examine here, we didn't see any manipulation and break of structure, and it was just a simple order flow, then we would have waited for manipulation inside here. But since there was already there is manipulation already inside this area, then you're going to wait for that pullback into the order block or fair value gap to enter from. So that would have been our entry right there. Beautiful trade. Stop loss here, targeting to R, and you are done. Once you get this set up, you should be done. You shouldn't be looking for anything else. Okay, should be done. Now let's look at the next day. The same thing between 7 and 16. This part of a chart, that's where you're looking for what? A setup. Before you look for any setups here, you have to examine this area first to see if there was any manipulation. I realized there was manipulation here and a break of structure here. So we would have anticipated price pulling back to these up close candles, which are your order block. Price never came to it, but looking at price around here, this will be your anticipation that price should pull back to that area for you to enter from. Okay, so already you have framed a bearish bias trying to look for sales. Now we don't get that bearish. You don't get that pullback to sell, but what happens is we have another manipulation here and a break of structure here. So we were anticipating price to come here, which it failed to do so. So once that it has manipulated and broken down one more time, then you can look for entries from fair value gaps, from order blocks, from breaker blocks, whatever you want to enter from. And since the time is still between 7 to 4, the entry is still valid for us to take. So this would have been your entry, targeting times 2, and you are done. Okay, target times 2 and you are done. Let's look at 1 or 2 more examples. Let's look at this example between 7 and 16. That's 4. So around here, you're looking for what manipulations and break of structures that has happened. And we can clearly see that there was manipulation of this low and a break of structure of this high. So right after 7, we are only looking for 110, a pullback to an order block with fair value gap to buy from. So we have this order block, we have this fair value gap. And as I say, you're always looking for the last fair value gap or order block to enter from. That would have been your entry, targeting times 2, stop loss below this low. Simple. Simple. So there are instances where price will give you your initial let's say, so like the other videos, if you have manipulation here, price pulls back. So we have first of all, let me do it this way. Let's say there's manipulation of this low and price broke structure here. And let's say you are anticipating to buy from an order block or fair value gap here. But what end up happening is it gives you just a small reaction and then this pattern fails. Once it fails, I've taught you how to turn your failure into a success. Anticipate price pulling back to the breaker block and now look for sales to get your money back. So when you lose, don't cry. Just turn your setup upside down and then look for the opposing side of the curve. Okay, initially you have your manipulation down here, break of structure, you are trying to buy from here, and then this whole pattern gets manipulated again. So this same area you're trying to buy from now, that will be the same area I'm going to sell from. As simple as that. I was trying to see if I'll get one example of that. Let me see if I can get one example of such. So between 7, okay, I think there will be an example here. So at 7, you are looking for previous manipulations and break of structures, right? And I realized there was manipulation here, break of structure down here. So ideally, after 7, you are trying to look for sales straight away from these other blocks, right? From that other block. And as you can see, we break through it aggressively. So once that happens, we can now use the breaker block for entry right here. So as price pulls back and test the breaker block, we can now look for buys and you will get our money back. So we try to sell from here, it fails. Now buy from it and you get your money back. And normally when this pattern forms and it fails, the breaker block entry that it later gives, the reaction is just crazy all the time. Just crazy. So initially this was it and it fails, pull back to retest a breaker and boom. So just like the signal I sent to you guys today, let's check current price for today. You can see that on V75 I used this same strategy to send a signal in the morning which failed, but later on gave us a breaker entry to get our money back. So this was it at 7. I marked previous manipulation that has happened, and here was it. There was manipulation of this high and a break of structure down here. So all I was looking at after 7 was to see price come to this rejection block and then this other block for me to sell from. And as you can see, price took us out and took our stop loss. And I said we are going to turn this failure into a success and we should set buy limit right at the breaker. And then boom, it gave us our money back with TP at this high. So that's how you turn your failure into a success. So the pattern is not 100% pattern that's going to work all the time. But once it fails, immediately reverse and take entry from a breaker. Okay. And as you've watched confirmation entries, if only we break and close above the breaker, we are going to enter from the breaker. But if we just broke that high with a wick, we didn't close, then you would anticipate rather price pulling back all the way down here for the entry. Okay, that would have been your anticipation. But here we close above it, so the breaker would have been the entry. If it was just a break by a wick, we would have waited for a pullback to the last OB for the entry rather. Okay. So now you have a duty to go into your charts and backtest as much as possible so that you can trust this pattern. All the best, guys.